Welcome to the Thursday edition of Tech Stocks Daily. Buckle up as we dive into today's sizzling NASDAQ updates. CrowdStrike is in hot water with multiple lawsuits over their Falcon platform. Appian stock tumbles despite solid Q2 earnings due to shaky future guidance. Infosys battles a major GST tax drama while forging powerful AI partnerships. And all eyes are on Apple, with Q3 earnings set to drop. Plus juicy rumors swirling around Siri's integration with OpenAI's ChatGPT. Stay tuned for a whirlwind of tech drama, intrigue, and insights you can't miss. It's a chaotic day in the tech world, folks. Our headliner for today, the cybersecurity giant CrowdStrike Holdings, Inc. And oh boy, are they having a rough patch. Let's break down why CrowdStrike is all over the news right now. The drama started with a series of lawsuits involving CrowdStrike. Yes, that's multiple simultaneous legal woofers. According to a flurry of press releases, several heavyweight law firms, including Braunstein, Gewirtz & Grossman LLC and Hagens Berman, are representing a herd of disgruntled investors. The kicker? These investors allege that CrowdStrike misled them about the efficacy of its Falcon platform during a crucial time period, and that they've suffered substantial losses as a result. First up on the storyline playlist is the news that Braunstein, Gewirtz & Grossman LLC announced a class action lawsuit. This suit claims that CrowdStrike didn't exactly have the firmest grip on their software's quality control. The accusations? Deficient testing policies for their Falcon platform led to a disastrous update which wreaked havoc on various businesses, from banks and airlines to healthcare providers. Ouch, that's a service outage you'd need a Falcon squadron to save. The market responded with panic, sending CRWD shares plummeting. They lost around a third of their value. Oof, not the type of correction anyone was hoping for. Then we jump to Hagens Berman, another major player in this legal saga. This firm pinpointed a rather grisly scenario. An update to CrowdStrike's Falcon sensor caused an overnight outage on July 19, 2024, affecting 8.5 million, yes, million, Windows computers worldwide. The result? Critical disruptions across businesses, train stations, airports, and even broadcasters, earning the update the affectionate nickname, the blue screen of death. If you're envisioning a dystopian disturbia, liveried with blank screens and operational chaos, you're not far off. Moreover, as if CrowdStrike needed another pounding, Johnson Fistel LLP started investigating the company's directors and officers for breaching their fiduciary duties. There's suspicion they took the out-to-lunch sign a bit too seriously when it came to updating Falcon. You know it's bad when individual directors start becoming the focal point for investor litigation. Adding to the stew, comparatives serve as a grim reminder. SentinelOne, a competitor in the same domain, is suddenly looking more appealing. Following the fiasco, SentinelOne's stock rose while CrowdStrike's plummeted. In tech speak, it's like hearing all aboard the sinking ship. No, thank you. What's the takeaway here? Investors who bought CrowdStrike stock between November 29, 2023 and July 29, 2024 are now caught in an intricate web of lawsuits seeking recovery. Analysts posit that CrowdStrike's reputation may require a Herculean effort to recover, maybe even larger incentives to retain their current customer base. So what's in the cards for CrowdStrike? Only time and investigations will tell. Keep your eyes peeled, and let's see if CrowdStrike can bounce back, or if they'll be living in lawsuit labyrinth for the foreseeable future. Could SentinelOne swoop in and steal the spotlight? Popcorn out, people. It's going to be a thrilling tech ride. Hey tech enthusiasts, buckle up, because today's tech update dives deep into the swirling headlines around Appian. If you're keeping an eye on the NASDAQ, you'd have noticed Appian shares took quite the nosedive, plunging a whopping 20.34% today. The ever-volatile world of tech stocks. So what's fueling this firestorm? Appian, the cloud software maven focused on business process automation, recently released its second quarter earnings. And believe it or not, the news wasn't all bad. The company beat analyst expectations on multiple fronts. Revenue and EPS did better than consensus estimates. Sounds confusing that the stock is tanking, right? Well, Appian's cloud subscription revenue, its bread and butter, grew 19% to a neat $88.4 million. Overall, their revenue climbed 15% to a solid $146.5 million, easily outpacing analyst predictions of $143 million. Even their gross renewal rate was stellar at 99%, and with a subscription gross margin of 88.5%, profit margins on existing customers are looking peachy. But wait, there's more good news. Appian AI, which folds in generative AI, data fabric, and automation, saw its usage numbers double quarter over quarter. Likewise, a key government vertical also doubled its bookings. Awesome sauce, right? Well, not so fast. Here's where things get tricky. Future guidance. Appian forecasted weaker than expected revenue guidance for the third quarter and the entire year, which sent a clear sell signal to cautious investors. The projected Q3 revenue is between $149 million and $153 million, below the consensus estimate of $155.6 million. For the full year, they're anticipating $610 million to $615 million, falling short of the $600.7 million analysts had hoped for. Why so glum? Appian? It's possible that the curtain of layoffs from July, where 170 employees got the pink slip, has investors worried. While Appian did move up its target to break even adjusted EBITDA from 2025 to 2024, potentially a sign of evolving operational efficiency, worries persist that these layoffs might slam the brakes on future revenue growth. And if that wasn't enough, D.A. Davidson recently downgraded the stock from a buy to neutral, slashing the price target from 48 to 33. Appian shares closed down more than 12% at 32.10, a far cry from its year-long highs. In summary, Appian's got a bag of mixed goodies. Stellar current performance figures meet shaky future projections, freaked out investors bolt, and the share price plummets. This tango of good news and guarded forecasts has left everyone scratching their heads in wallets. Will the accelerated path to profitability pan out, or will those revenue concerns create further turbulence for Appian's stock? Stay tuned, folks. We'll be keeping a sharp eye on this one. Woo, Infosys is stealing the spotlight today with its dizzying dance moves on multiple fronts. Let's dive into the buzz surrounding this tech giant, making waves in the news. First off, let's talk about the headline-hogging Rs 32,400 crore GST demand notice. Karnataka state authorities initially issued a notice to Infosys for non-payment of integrated goods and services tax on certain import services, dating back a few years. However, in a twist worthy of a soap opera, they've now withdrawn this pre-show cause notice. The state authorities directed Infosys to respond further to the Directorate General of GST Intelligence. Now, if you're wondering what's cooking, DGGI's beef with Infosys revolves around IGST payments under the reverse charge mechanism. Essentially claims that Infosys owes some serious dough for services received from its international branches between 2017 and 2022. Infosys, however, stands its ground and claims everything's kosher. Notably, they've pointed out a recent Central Board of Indirect Taxes and Customs circular, clarifying that services provided by offshore branches to Indian entities aren't subject to GST. Also, NASCOM, the tech industry's watchdog, has jumped into the fray, stating that the demand reveals a massive gap in understanding the IT industry's operating model. But that's not all. Infosys' dance floor isn't limited to GST cha-cha. They've also expanded their collaboration with ServiceNow, a marvel of a move aimed at amping up enterprise AI capabilities. They plan to provide end-to-end managed services, using the AI machinery of the Now platform and Infosys Enterprise Service Management Cafe. Crucially, this collaboration will turbocharge ServiceNow implementations by 30% to 40% for enterprises, shaving off the time to achieve value and improving operational efficiency. Their AI-powered plug-and-play solutions like Infosys Cobalt offer enterprises a breezy ride towards digital transformation. This topsy-turvy GST debacle did take a toll on Infosys' share price. The company's stock slid by 0.84%, trading at $52.30, down from recent highs. Still, it's crucial to note that Info AMA 6 cumulative share performance remains buoyant, reflecting a 14.44% rise over the past month, fairly outpacing the BSE Tech Index and Sensex. So in a nutshell, amidst a cacophony of tax squabbles and burgeoning AI collaborations, Infosys continues to demonstrate its prowess while grappling with complex regulatory landscapes. Whether it's fighting off enormous tax demands or pushing the envelope in AI-driven enterprise solutions, Infosys has shown that it can keep its composure and march forward. Don't touch that dial, because you can bet the continuing saga of Infosys' epic battle with GST, alongside these groundbreaking partnerships, means there's plenty more spectacle on the horizon. All right, Tech Tribe, let's break down why Apple has been the shiny, polished apple of everyone's eye today on the NASDAQ news front. First off, everyone's on pins and needles because Apple is just about to drop its Q3 earnings bombshell. Set to report after the market closed this Thursday, Wall Street's crystal ball is predicting earnings per share of 134 cents, with total revenues ringing in at a massive $84.36 billion. Apple's stock is currently flexing at $224.50, soaring above its 520 and 50-day moving averages. There's bullish buzz aplenty, as even the MACD is flashing positive vibes despite a relatively overbought RSI. Zooming in on technical analysis, the stock seems to be riding high on those charts, especially with an 8-day simple moving average of 233 and a long-term boost from the 200-day SMA at 189.35. And let's not sweep under the rug that analysts are painting a pretty picture too. The consensus price target hovers around $233.55, while some recent optimistic wizards from TD Cowen, Raymond James, and Baird are eyeing an average price target of $246.67, a delectable 9.88% upside. Now let's talk about squeezing some cash from those AAPL juicy dividends. Want to make $500 a month? Well, brace yourself. You'd need roughly 6,000 shares, translating to a small fortune of $1.33 million. Even a modest goal of 100 per month requires a sizable $266,496 investment. It's a high-stakes game, my friends, ebbing and flowing with Apple's quarterly dividend of 25 cents per share and the general tango of stock prices. Apple's got even more staying power as it's not just isolated to single stocks. ETFs are vibing hard with the tech giant too. Names like the Vanguard Information Technology ETF, MSCI Information Technology Index ETF, iShares US Technology ETF, and iShares Russell Top 200 Growth ETF are all loading up on Apple stock. With Apple featuring as almost a tenth of the S&P 500 tech sector, ETFs hunting value in this sector are banking on some serious core Apple flavor. And let's not forget AI. Yes, Apple's finally jumping on the AI superhighway with Apple Intelligence for iPhones, iPads, and Macs. They've even co-seed up with ChatGPT maker OpenAI to offer access via Siri at no extra cost. It's a slick move to kickstart the next upgrade cycle, possibly converting over fence sitters. Let's not gloss over Apple's evolving gadgetry either, boasting a forecasted surge in iPad sales and a potential iPhone 16 debut this September. Plus, they're laying down big hopes on big iPhone discounts to charm back some love from China. So techies, what's your take? Is Apple poised for another golden chapter, or do you foresee a few worms in the apple? Are you riding the AAPL wave or playing it cautiously? Share your thoughts in the comments, and let's decipher this fruity frenzy together. All right, tech aficionados, let's dig into the specifics of one hot ticker from today's juicy lineup. I'm zooming in on CrowdStrike, the cybersecurity titan that's currently under the microscope. So what's the game plan here? Buy, sell, or hold? Drum roll, please. I'd say sell. Here's why. The news ain't bright for CrowdStrike right now. Multiple heavyweight law firms have announced class action lawsuits, alleging the company misled investors about its Falcon platform's robustness. With Braunstein, Gewurz and Grossman LLC and Higgins Berman leading the charge, these legal wolves claim that gaps in quality control led to significant service outages. One particularly disastrous Falcon update has even been tagged as visiting the dreaded blue screen of death onto a jaw-dropping 8.5 million Windows computers. Now, when you see phrases like deficient testing policies and critical disruptions across businesses, you better believe those are sirens wailing for consequence. These lawsuits have already triggered a panic sell-off, causing CRWD to tumble by about a third of its value. To add salt to the wound, there's another investigation led by Johnson Fistel LLP into the company's leadership, a potential nail in the coffin if directors are found asleep at the wheel. Further complicating the scenario, SentinelOne, the competition, is looking increasingly golden as CrowdStrike's reputation hits choppy waters. SentinelOne's upward stock movement on CRWD's bad news shows market sentiment might be shifting. The bottom line? Lawsuits can linger like a bad cup of coffee, affecting company reputation, stock value, and oh dear, investor confidence. Selling CRWD now could mitigate your losses before more dirt potentially hits the fan. However, I'm no fortune teller, just your enthusiastic tech news maestro. Do your own research before making any moves. The market is a wild roller coaster, and every investor's risk tolerance is as unique as fingerprint algorithms. So what do you think? Selling seems to be the defensive play here, but would you cash out or ride this chaotic wave, hoping for a bounce back? Sound off in the comments, and let's chew on this tech turbulence together. Phew! What a roller coaster ride over at the NASDAQ today. Between CrowdStrike's legal whirlwinds and nosediving stock, Appian's wild revenue tango, Infosys navigating through tax turmoil and an AI-fueled future, and Apple teasing us with what might be an earnings bonanza, it's clear the tech sector is buzzing louder than a server farm running at full throttle. If you liked what you heard, smash that like button, subscribe for daily tech news with a twist, and share this with your fellow tech aficionados. Be sure to tune in tomorrow for another roundup of all things tech. Keep those notifications on. Until then, stay savvy and stay curious.